Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing American Airlines stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, 6.8 billion market cap. They're trading at $10 a share and they have 650 million shares outstanding. American Airlines provides scheduled air transportation services for passengers and cargo through their hubs in Charlotte, Chicago, Dallas, LA, Miami, New York, Philadelphia, Phoenix, and DC. They also have partner gateways in London, Doha, Madrid, Seattle, Sydney, and Tokyo. They operate a fleet of 965 aircraft. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. $500 million in 2021, then negative $400 million in 22, back to positive in 23, 1.2 billion, negative again in the trailing 12 months, negative 800 million. It's really hard to value a company that's so volatile. Positive, negative, positive, negative. Net income is the profit or loss on the income statements, revenue minus expenses, negative 2 billion in 21, 100 million in 22, 800 million in 23, so things were improving, but back to negative in the trailing 12 months. Revenue is the sales for the company, and that went up 64% from 21 to 22, a modest growth into 2023, up 8%, 53 billion, and then up only 1% in the trailing 12 months. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows. Past year 4, that's 17 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $13 billion. We divide that by 650 million shares. And we get a calculated stock price of $20. They're trading at $10, so they're trading at a 49% discount. It's a pretty strong buy according to the model. Do you think it's a buy or sell? Let me know in the comments. Simply Wall Street values the company at $1. They say they're extremely overvalued. 18 analysts priced this stock at $12. They say it's slightly undervalued. There are 16 companies in the same industry as American. If they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spent $2.3 billion in CapEx. Most of the CapEx spend is the purchase of aircraft. We can't look at their debt to equity ratio, negative equity, which means their liabilities are higher than our assets. Negative 800 million of free cash flow. They rank 4th in market cap at 6.8 billion, pretty far behind Delta. We can't look at their price to book, negative equity. We can't look at their PE, negative earnings. We can't look at their price to free cash flow, negative free cash flow. Price to sales is 0.1, which is the best on this list. If a company had a price to sales exactly 0.1, then their revenue will be 10 times their market cap. So they're obviously a little higher than 0.1, maybe 0.13. They generate a lot of revenue, third highest on this list at 53 billion, but their 5-year annual revenue growth rate is only 3%, which is lower than the median average. Here's their latest income statement, the second quarter of 24, second quarter of 23. Passenger revenue is up slightly from 13 billion to 13.4 billion. Cargo is flat, other is up. Their biggest expense is salaries, 4 billion, fuel, 3 billion, regional expenses, 1.3 billion. So their total expense is 13 billion, up from 12 billion. Operating income is down. It was 2.2 billion, now it's 1.4 billion. They spent nearly $500 million of interest on their debt, which is down from last year. Pre-tax income, 1 billion, 300 million of taxes, 700 million of net income. A little more than half of last year. Earnings per share is about half of last year. And shares outstanding are going up a little bit from 654 million to 657 million. But diluted shares are really high, 720 million. So lots of people hold securities that they can convert to equity. So to summarize, I have them trading at a 49% discount. I give them a ranking of 8 out of 10 because they do appear really undervalued. Would I buy them? 1 out of 10. Ratios 2 out of 10. We can't even look at most of their ratios. Financials 4 out of 10. Revenue is up 79% since 2021, but their free cash flow is really volatile. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.